Hi, it's April 8th, time for the next rant. This time I'd like to start by going backwards and say, what should have the world been before central banks around the world, led by the Fed, decided to have non-stop escalating stimulus policies for the last 13, 14 years, which has never even come close to happening in history and has distorted our economy more than anybody could possibly imagine. Here's what should have happened by my very proven spending wave and inflation indicators. We should have had that first peak in late 2007, and that should have been a long-term top for the baby boom spending wave, the greatest boom in history still, even at that point. And then we should have had a major crash, 70, 80, maybe even 90% into 2010, typical 2 to 3 year big first crash, then a lot of stimulus, and then an off and on, gyrating rally, not to new highs, maybe gets close way out, but into maybe 2019 or so, okay? Off and on, and maybe test the highs in 2007, but likely not even do that in normal circumstances without all the stimulus. And then we would have had a second crash period from, say, late 2019 into late 2022, and we would have gone back to those lows in 2010 or so, or likely to slight new lows, okay? And we would have ended up, maybe the S&P at 600 to 1,000, which I think we're gonna end up anyway. So instead, the 2008 recession and crash into early 2009, they stimulated the strongest in history and all central banks around the world, and they've done it ever since. And my most important point recently, it was 3.6 trillion in stimulus from 2009 into its first plateau into 2014, okay? And that plateaued into 2017 and then dropped off a bit. And as soon as it drops off, things started getting weak, so they hit it again. 5.1 trillion, and still rising a bit, in the last 2 years. It's 23% or so of GDP just to keep the economy growing a couple percent a year off and on average. And it really has averaged more like 2% since 2009. Much lower than usual, despite unprecedented stimulus. So we've seen that top, we're going to see a final crash into later this year, say late 2022. That, by the way, has been my target for the low in stocks of our lifetime, all the way back to the late 80s when I started, wrote, our Power to Predict, and then the great boom ahead to follow, and started really talking about demographics and how big and great this boom would be. Well, again, central banks, to simply avoid a recession, like there's something wrong with the recessions, which would be like saying something wrong when we're sleeping because we're not working as hard and as long as we could if we didn't sleep. It's really kind of that non-common sense view of economics. But so this has taken us to massive new highs. The stock market got like 2.5 times as high as in 2007, in a time where the demographics said, particularly in the leading parts of the world, the Western world, US, Canada, Europe, and all that sort of stuff, and Japan, that we should have been nearing a lifetime bottom. So obviously, to catch up here, we have to have a major crash. And we're coming into that late 2022 target on cycles. Now that's decennial cycle. That is 20, 40, 30, 60, 90. I mean, all of the cycles, particularly the 90 year, which is the strongest, as I've shown time and time again, especially to subscribers in these lives. That is the most powerful cycle in stocks since the stock market started in the late 1700s. So we're gonna have to get back to there after getting way out of kilter to the upside. So my projections are that we will not bottom until somewhere between late 2023 and 24 now, and we will have a sharper, harder crash that could take the S&P down as low as 670, down like 86% or so. And we'll be getting off light after this much stimulus and stuff for that. But that's probably about where it would have ended up anyway if we'd have just crashed in 2008 forward and gone sideways for a long time. So that's the outlook. The timing is difficult, but we do know, finally, the Federal Reserve and central banks around the world, similarly, after so much stimulus and finally creating inflation, you got to note also I have this inflation indicator that's been saying that inflation is going to go down to near zero into the early 2020s, which it's done. And so their stimulus at first, as massive as it was, didn't cause that much of an inflation response, but they went so far with that 5.1 trillion in 2 years. They panicked over COVID. Now, first of all, why would you panic over a short-term crisis, okay? It's a short-term crisis, something you'd expect to last like it did a couple of years back. Why would you print that much money and not just let people get a little sick and stay home a little bit and the economy slow and get over it? No, they know they can't, because they know in this bubble, if it bursts, it's going to burst hard. So that's why the clock is ticking. I'm just telling subscribers, you're going to keep seeing more than average updates, because we have seen a succession of tops, and I've covered this in past sessions. This is extremely important. Most of the time, most stock markets will peak around the same time at a major top, every several years or so, okay? No, this started in foreign markets back in February of 2021 and progressed to the small caps in early November and the large caps in late November. And now the S&P 500, the broadest, largest indicator in the US, on January 4th, peaked in that succession. Now, we did not see the big crash that would say this was an obvious top. Doesn't mean it's not a top, but it would have made it obvious if we'd have gone down 30 to 40% in the first couple months. Well, it didn't, okay? It went down 22% for the NASDAQ, 14% for the S&P. So now we have a rebound that's getting like within 4 or 5% of the S&P high. So I think, and there's a lot of scenarios here, because it gets complex when there's this much politics and this much stimulus, and they're withdrawing, but it's not clear how fast, and da-da-da-da-da. They're committing to withdrawing, but they're being very slow about it. I think the most likely scenario here, and again, there's many, and I'll keep subscribers updated, we go up and make a slight new high on the S&P 500, and what will be great, even the NASDAQ does not confirm that and make a new high. And the S&P 500 would have to rally something like 23% now to make a new high. That's the one chart I'm looking at that looks crystal clear to me. Clear 5-wave long-term and intermediate term top, clear first wave down, and very low chances of making new a high. And the fact that any of these large cap indices, the S&P or NASDAQ, make new highs and the small caps doesn't, is saying top, 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 top. So again, I think we could have made a top on January 4th. That's I'd say about equally likely, or better and easier to play. We make a slight new high, maybe 4,900, 5,000 max on the S&P 500, and the NASDAQ cannot make a new high, and the small caps, the Russell 2000, don't come close. And then we start to crash. And this next crash should be, if that's the top, and I think very, very likely by, say, late April-ish is a good time frame. That next crash should be more like 40, 50% in 2 to 3 months. And then we know it's over, okay? So it could be over, but the market is so good. And you have to respect the market here. I've been studying this thing for 40 years now. It is a snake, man. It's the smart money, highly leveraged, large amounts of money, trading against everyday interests of investors. We come in too late, and we come in and they see us come in, they just trash the market and scare us out again. And when we panic, they drive it up. That's what they do for a living, on high leverage that magnifies their impact, okay? So this is a time to play safe. I would say if you're still in the market to some extent, maybe give it to about the 3rd week of April. I'd give you April 21st, give or take, okay? If we're drifting up, especially if we make a slight new high in the S&P 500, that'll be an excellent final sell signal, especially with no confirmation and a high chance there wouldn't be on the NASDAQ making new highs, or the Russell 2000, almost no chance. So that's the most likely scenario here for subscribers. I'm going to keep you updated, because there are a number of scenarios. When you get this late stage and there's this many forces, the fundamentals keep weakening, but governments keep getting more squeamish and unpredictable how they're going to respond, although they are starting to respond, and they're basically obligated. They've set their own trap here. So again, subscribers, stay tuned. There's going to be probably a lot of updates coming in the next few weeks.